Hello everyone and thank you so much for joining the session. We will start the session in less than a minute. Hello and welcome back to another session of Retail Trader Special. I am Kavita Agrawal, the founder of EXP-Invest. Today we are here to talk about Trendlines. Now, Trendlines is a very common tool. It is the first tool that most people who get exposed to the world of technical analysis learn. However, I have seen that over the last 10 years of my practice through social media, I have learned that a lot of people end up using this tool in the wrong way across different time frames and for wrong purposes. So, this is the second of its kind webinar where I have decided to burst a lot of myths around how a good trend line is drawn, what is the purpose of the trend line, and how to use it for your purpose. I will also demonstrate to you how drawing trend lines on different charts, different indices or currencies or commodities, how drawing them in a wrong way can really affect your perspective and your expectations. So, this is how we are going to play the next 45 minutes out. The first 30 minutes, we are going to talk about trend lines. I'm going to give you some demonstrations on different charts. I will also take stock queries from you. So, whichever stocks you post for me in the comments, I will analyze them for you during this webinar. And in doing so, I will demonstrate the use of trend lines the way I like to do it and tell you why it is more effective than drawing trend lines the way they are conventionally drawn, which is randomly joining two different highs or two different lows. So without much delay, let's get started. All right, so what you're seeing on your screen is the chart of CNX IT, that is the IT sector's chart. Okay, now this is the weekly time frame. Why I'm showing you the weekly time frame is because when we start drawing trend lines, it is important that the trend line or the tool, the name of the tool, the purpose lies in it lies in there itself. It's very important that the trend line fulfills its purpose. That is, it is drawn in the direction of the trend. And whenever we want to do trading, the trend is best observed on broader time frames like the monthly or the weekly time frames. Now, irrespective of which sector, currency, commodity, or which specific stock you want to trade, there is always going to be an underlying trend. Sure, there are times when the trend is not very clear, or a stock may have IPO'd just few months or few years back and may not have established a dominating trend like we see in chart of Zomato or Nykaa or Delivery, which are relatively newer charts, newer stocks. But then there are also stocks like Alok Industries, for instance, I'll show you, where a very good trend is very difficult to discern, even though the stock has been listed for more than 2 years, right? Going back to the chart of CNX IT. Now, IT is a very dear sector for many people, and for good reason that too. It has given multi-bagger returns uh, in many different stocks, right? However, like anything in the stock market, even investing in the IT sector is not free of all sorts of risks. However, on the daily or on the weekly time frame that I have opened for you, you can clearly see that there is a very neat upward sloping trend. Now, in the whole thesis of long term investing, it is always said that if you believe in a company, just put your money and forget about it. Don't worry about the temporary dips. Now, this strategy may not be very effective for a lot of people because majority people in our country have very limited capital. So it is not feasible for the majority to just put money and then experience 40, 50, 60, even 80% erosion before a subsequent uptrend happens. So using the trend lines, they give us one very good indication of where a support may lie in the event of a massive correction. Now, one very important thing that you need to remember when you're using trend line is you need to commit to a time period or a time frame that you're going to trade. Now, obviously, in order to be a good trader, you need to look above that time frame and below that time frame. Just to emphasize what I'm saying or give you a better explanation of what I'm saying, this is what I want to show you. I personally use 6 different time frames all the way from 3-minute to monthly. The purpose of the weekly and the monthly time frame is predominantly to tell me which direction the broad or the primary trend is unfolding in, and then the daily 75 and 15-minute time frame help me in keeping a close eye on the trends. My trading decisions are based on the 75-minute time frame, that is this one, based on confirmations from the 15-minute time frame and the daily time frame. Now, what is the purpose of the 3-minute time frame? The 3-minute time frame serves predominantly one purpose for me, that is identifying when a reversal in a price trend is happening after I have an active position. So when I'm managing a position, that is when the 3-minute and the 15-minute time frame play a bigger role. Okay, so that's the broad context of what we are speaking in. So when drawing trend lines, it is always advisable to start with the biggest time frame that you can identify. Why is that? So in order to emphasize that a little bit more, let's go into the lower time frame. For instance, I'll use a 15-minute time frame, okay, because a lot of people have the tendency to draw trend lines on small time frames. Why I don't suggest drawing trend lines on small time frames is this. In the smaller time frame, the amount of noise really increases and your view of the price action becomes very myopic, which means that firstly you don't have any idea of what the broad trend is because there is only so much space on your screen, and the amount of fluctuation that is happening, that is the zigzag movement in the price, is a lot more pronounced. Okay, so this when you look at anything from a very very close up view, you basically lose a lot of perspective. But when we draw trend lines on the weekly time frame, it helps us establish that okay, this is the direction of the price, and these trend lines also act as very good support and resistance zones in the broader sense of the price change. Like for instance, if you see here, I started drawing these trend lines. Okay, let's just draw these trend lines again. Okay, I'm going to delete these trend lines and I'm going to draw them again for you. So this is how I advise you to draw trend lines. Choose any 2 major tops or major bottoms and then start cloning trend lines. So for in this chart, I can either choose the 2 tops or the 2 bottoms. Okay, so let's choose the 2 tops. Why the 2 tops? So I prefer usually to choose 2 tops over 2 bottoms because bottoms are formed during lot more sentimentality than the tops. The tops are so during the tops people may end up selling a little too soon, not buying too much extra. So a top I believe the formation of a top is a better reflection of market pricing than the bottoms. Bottoms, as we also saw during COVID in the 2008 crash, they are usually overextended. Okay. So we've joined the two tops here. Now, because this is trading view, I'm going to tell you exactly how to clone. Now, before cloning also, few more things, hygiene checks that I want to remind you of. There are two settings that you should always take care of on your charts. One is the logarithmic price setting and the second is the dividend impact. Now, I know a lot of people are pro adjusting their charts for dividend impact, but if you want to do good technical analysis, then having price change regularly on your charts is not going to do you any favors. So firstly, if you want, so I'll show you the charts without logarithmic settings. So I'm just going to press Alt L and you can see the price makes absolutely no sense. But so this is the regular pricing. As you can see, the change in price from the scale basically progresses in a fixed manner. But when we do a logarithmic chart, the scale basically progresses in a percentage manner and the price unfolding makes a lot of sense. Basically, what happens is a change of price at a 5% change of price at 31,998 has the same impact on the drawing of the chart versus when the price was like 5% movement in price when it was at 109. Okay, so in absolute amount terms, it's a massive difference, but in percentage terms, if you see, you are able to determine what the trend has been in a lot better manner. That is why we always want to study log charts. The best way of opening log charts is to basically press Alt plus L. Press Alt and L together in TradingView and your charts will automatically adjust to logarithmic view. Okay, that's one thing. The second thing that you need to check for, as I was saying, is your dividend data. So this is somewhere here you have the dividend data. I think events, I think it's in trading. Let's just see extended price. I think I have to probably go to scales. No overlapping. I forget where it is. I always tend to lose it. Let me just go some time frames lower and check it out. Regular trade. Okay, one more thing is the data modification. You should only have the regular trading hour, not the extended trading hours. Now, there are some markets like the US market where the extending trading hour is almost as much as the regular trading hour. Okay, but the volumes are very scarce there and the price changes is not a very good reflection of active market trading. So it is better not to include that in your active trading. I seem to have completely lost where the dividend adjustment is, but I promise it is somewhere in this only. It was, I think, somewhere here. Indicating previous day's close. Let me just check on the daily time frame. I'm sorry, dividend is not obviously showing this because this is an index. So when I go on a stock chart, I will show it to you. So the advantage of having price unadjusted for dividend is that basically when a dividend is announced, right, what happens is that the price originally opens gap down. We all know this. Okay, when you adjust your charts for dividends, this gap down is no longer shown and the price historically adjusts. That is not a very good idea for your drawings because then your drawings don't adjust. Only the candlesticks will adjust and everything will look very haywire. So I actually discovered this point very recently because I kept noticing that my drawings were looking a little, disturbed on some time frames, and some time frames they were completely fine. So upon some investigation, I learned that it was because of dividend adjusting, and I removed dividend adjusting and everything was back to normal. So these are two things that you should always take care of. Now going back to drawing the trend line. So we've already drawn the first trend line on the weekly time frame using two very prominent peaks. Okay. Now see, I haven't used this peak on purpose because if you look at the price, the CNX index was not the price formation was very jagged. There were a lot of, like if I show it to you on the daily time frame, you see how the price formation is. It's not a lot of data here. Okay, so I wouldn't take this as a very reliable data point, but this peak seems like a more reliable data point here. Okay, so this is basically a hygiene point that you need to take care of. Now, once this has been drawn, what I'm going to do is I'm going to press down the CTRL button. Okay, CTRL, the control button. I'm not sure how it is done on Mac, but on Windows you have to press down the control button. Okay, now while pressing down the control button, select the trend line and drag it. When you drag it, a same drawing with the same metric, same slope, in case of the trend line, will automatically be drawn. Now what you have to do is you have to establish, or you have to release this trend line wherever there is a key bottom, and you can see that I release the trend line at this bottom. But historically, if we see, it is coinciding with other important support points. What we are going to do is we are going to repeat the same process, and we are going to cover as many peaks as we can. Now you again see I dropped it at this peak, but this peak automatically also touches the point, touches the trend line. Okay, so I'm going to pull it again, and I'm going to drop this trend line here. So the objective is, see, you don't have to be very exact. Your objective should be that the trend line basically touches as many price points as possible. So here we can see the trend line having some emphasis. The trend line's having some emphasis here. Once the trend line breach this zone, let me just make it a little bit thicker because I think a lot of you might not be able to see it. So here you can see that the trend line had some emphasis. Here, as soon as the trend line got breached, there was sharp decline, move towards the next trend line, and then a strong reversal. Okay. Now we're gonna pull this trend line, and we are going to drop this here. So here we can now see the trend line having interaction with prices here, here, here. There we go, somewhere near here, and you can see on a roughly basis even this internal trend line is having a lot of impact. Okay, now when you're doing this process of basically cloning trend lines and covering key tops and bottoms, you don't have to pay any attention to the most recent price actions. Okay, now that we are done covering the major peaks and lows on the weekly time frame, now we'll go one time frame at a time. We'll go lower, and now it is completely fine. As you see more important peaks and bottoms, you keep cloning that same trend line and keep duplicating it and placing it on these key trend lines, key peaks and troughs. Okay, what this basically does is it allows you to play in the direction of the predominant trend of the underlying stock or index that you want to analyze. The big advantage that it has is it keeps you and your perspective aligned with the broad trend. Because see, going on the 75-minute, the 15-minute time frame, you can clearly see that because of the trend lines, you have a better perspective of where the price at any point of time, where it stands with respect to the broader trend. Okay, and you can take your decisions automatically. For instance, when the price started to move up here, we can see that when the price crossed here, it has already like you can consider it as it has overcome a resistance, or it has gone really far away from a support trend line. Moreover, the price here is above the 200 EMA, and if you look at the RSI, there is a negative divergence. So having a broad perspective of the price direction by drawing trend lines only and only in the direction of the trend will help you combine that analysis along with other indicators and other tools and get a better judgment of the price. Right now, what is on the flip side of this is, suppose you draw trend lines like this. Okay, like you join any two random lines and you join the trend line. Your impulse here would be that, okay, the price is coming down to take support on this line, so you know what, I'm going to make a position here, because on the 15-minute time frame, what you will basically see is that price has moved up from the 200 EMA here, and RSI has been very bullish. So let's take a long position here. But that would not be very, that would not go in your favor, because basically, firstly, it leads to a very, very messy chart, because if you're drawing one trend line there, that means you'll also draw one trend line here, that means you'll also draw one trend line here, you'll draw a trend line here, and this just makes no sense. If you keep drawing random lines without respect or without consideration for the broad trend line, your chart at the end of the day is going to get super, super messy. Okay, so that is basically at the core of this entire way of using trend lines. What I'm going to do now is I'm going to take a quick look at what comments you have shared with me, and from your comments I'll be picking up stocks, and then we'll discuss more about proper usage of trend lines through those analysis. Now, in my practice as a research analyst, and I also run a trade together program for this purpose, right? In my practice, I have seen using trend lines only and only for the purpose of identifying the underlying trend and placing my bets only in favor of the underlying trends has allowed me to be very choosy in terms of the trade setups that I want to participate in. See, if you want to be successful in the stock market, and if technical analysis is the route that you choose to trade, you have to make sure that you don't rely on any one tool, any one indicator, or any one pattern for your success. A lot of people claim to be breakout traders or support resistance traders, but that's not how you should approach it. This Trade Together program actually has been a series of 10 webinars where every week I have covered one topic for you. Okay, the idea has been to demonstrate to you how collecting evidences from different analysis methods, like I use RSI, moving averages, volume analysis, trendline analysis, Fibonacci ratios, chart patterns, candlestick patterns, and volatility measures, among few others. These are all things that I look at for every single trade setup, and all this analysis is done on multiple time frames, which I just showed you. Okay, like on the 15-minute, 75-minute, daily, weekly time frame, and only when all the time frames and at least 3-4 of these heads of analysis, as long as they are all saying the same thing or indicating the same strength, unless that happens, I will not go ahead and commit my capital to any trade setup. What we need to do is basically collect a cluster of evidences in order to make a good trade in the stock market. Now, see, if you are interested in trading or connecting with me, basically, I would suggest you join my Telegram channel. I'm dropping the link in the comments for you. So what I basically do is that in this Telegram channel, there is also a chat group. And if anybody has questions about the tools that I use, or the trade setups that I form, or the stock market updates that I give, then I am very happy to respond to people's query one-on-one. Okay. Now, let's move on to the comments. I can see hello to everybody who's attending. Okay, so we have a query by Praful. He's asking for about DLF. Okay, I see a lot of people asking for stocks like Adani, DLF, Vedel. I mean, come on, there are like much better stocks in the market. Okay, all right. So this is DLF. All right. Now, DLF, you can see there is no one particular trend, but ever since it started trading since 2008, it has two dominating trends on the chart. So because we don't have a discernible top here, because see, this is a top still in forming, so I can't connect these two trend lines, right? I need an established top. So what I did was, first thing was I drew these parallel channels basis the few discernible tops that were here. Okay, So this was the maiden line that was drawn by connecting this and this point, and you can see it worked pretty well 4-5 times. And then I basically cloned this line to meet some of the other tops that I could identify on the chart. You see how this long back 2008 top and this top basically coincided at the trend line formed with the same slope of this in this trend line, and like the trend line formed by connecting these three peaks. It's amazing, right? It just works. Like, I don't know why it works, but it really works. Okay. And then you can see over here I have connected these two bottoms and basically these two bottoms here and here, and then I drew a trend line and then I cloned it to coincide with this peak here. What we can see is right here, this trend line has acted as a strong resistance. We can take another trend line and put it right here. Okay, and we can see that this acts as a very good internal trend line. Yes, internal trend line is a legitimate term. Okay, and basically it gives support to price in between the major peaks and bottoms. Now my analysis on DLF suggests, on the basis of what I'm seeing in volume, what I'm seeing in moving averages, and what I'm seeing in RSI, along with what I'm seeing on trend line, I would suggest you to stay away from DLF at this point of time. For the next few weeks, I would like to see DLF come back to test this 500-day moving average on the daily time frame, somewhere about the level of 400. And once it is somewhere near the level of 400, then I might take interest in then I might reanalyze the stock to make a potential long position. But right now I would not recommend you to do that. Now, if you are somebody who already has an active position in DLF, I would suggest you use the next few days, because next few days I'm expecting the broad market to be bullish, right? Because Nifty has today closed above the resistance of, or at the resistance of 19,350. So I think Nifty can go up to 19,500, right? So there's going to be some positive momentum in the market. I would suggest you use that as an opportunity to exit your existing positions in DLF. Okay. So we have a question on SJVN. Let's check it out. So very good rally has unfolded in SJVN recently. Oh my god, it's just gone straight up. So here's what we're gonna do. We are going to clone the trend line to match the peak. Now you see, trend lines also have a limitation. That is, if a stock is given a very sharp move up and it's in a territory which is way above the previous highs, then it basically leaves us with nothing there. How do you draw a trend line in this kind of situation? Unfortunately, I don't have an answer for you. One thing that you could do is, since this is the weekly time frame and there seems to be a massive reversal which happened in the stock since the March 2020, what can be done is we draw a new trend line with a fresh slope by joining the lows which have been already pretty well established. Having drawn that, we'll just clone it, and because the slope of this line is a lot steeper, it has a better chance of giving us support or resistance zone. Now the thing is that if I try to place it here, I'm not really getting a very good point to place it, because you see the slope here is not very justifiable. So unnecessarily, like if I just put it here, it wouldn't do a lot of benefit for me. So see, trend lines, that is the reason. See, every tool or every indicator is not going to work in every single situation. Okay, there will be situations where there are limitations. So this is one situation where trend line is experiencing a limitation, but it's not that we can't analyze it. I have an opinion for you on the basis of what I'm seeing in volumes and what I'm seeing on RSI. Okay, so RSI daily time frame, there is some negative divergence which does not make me very comfortable. And see, if you want to make a fresh position in SJVN, now is not a very good time. A good time would be wait for the stock to come back down to the 100 EMA on the 75-minute time frame. Okay, whenever it does that, it can be 8 to 10% lower. When it does that, go ahead and make your position, because the underlying trend seems to be very positive. But my philosophy in the market is very simple. always enter stocks before the rally. If you're going to chase a stock unnecessarily, you will end up hurting your capital, and more often than not, you will make the wrong entries. So enter stocks before they give the rally. In case of SJVN, we can clearly see it has already rallied quite a bit. It took a see, the problem is that here you can clearly see that the price has gone away from all its moving averages. Okay, so look at this point in December 22. If you had entered the top, you would have to endure a 27% decline in your price before you experience the multi-bagger return. Now just imagine the psychological stress you would have to experience seeing your capital get eroded by 20-25%. It's not a good feeling, and a lot of people will, have the better judgment of exiting the stock. So that is also one reason why it's always good for the stock to kind of revert back, because your risk reward ratio improves significantly in that kind of a situation. All right, so coming back to the analysis of SJVN, see, because the stock has already gone up so much, I would suggest you give it you give it some time and let the stock cool down, come back down to retest around 50-51 level, and then ask me again whether it's a good investment or not. However, if you do have an active position, then please maintain a stop loss around the level of 57. All right, moving on, we have a query on BHEL by Rocky Chopra. So, okay. All right, so I see a massive decline happened in the stock of BHEL recently. I remember a few days ago, somebody in one of these webinars had asked me to analyze BHEL, and I asked them not to make a long position. And what I can see is that in less than a month, the stock has lost nearly 17%. So I'm just hoping that whoever it was that asked about BHEL did not put any capital in there. Okay. So what I can see in BHEL is that it basically, gave a massive rally, but it has all like as good as topped out in 2010 and has been in a sideways consolidation, and it's like a massive range consolidation. I mean, goes up 6x, comes down 85%, goes up 4x, again comes down 80%, again goes up 6x. And from what I can see, based on the strong negative divergence on the weekly time frame, and the kind of volume profile that is unfolding, declines with very high volumes, breach of key exponential moving averages, it looks like the stock is again on a downtrend, and you don't want to be long on this stock. In fact, if you do have a long position, then what I just said for DLF, use the next few days ka positive momentum to exit your positions in BHEL. And if you want real trade setups with an admirable risk reward ratio, then please join my Telegram channel, and I can help you out in trading like a pro trader rather than taking unnecessary risk and losing your capital. Okay. All right, let's see. So that's BHEL for Rocky. We have a guest login who's asking about L&T. L&T. Okay. There you go. Larsen and Toubro. Very good rally unfolding in L&T from what I can see. And on L&T also, you can see that I have, drawn my trend lines the way that I just explained you, by drawing this top trend line and basically cloning it. And here again, you can see how beautifully key tops and key bottoms have been captured within these trend lines. It's okay if a little bit of the prices go outside trend lines. Don't worry about it. What really matters is that you capture the broad trend. Okay, and then when you're analyzing on lower time frames, you can adjust the trend line without adjusting the slope of the trend line. Okay. So here what I see is that L&T is basically given a superb rally, and so much so that it's completely gone outside of the trend line zone also. However, on the 75-minute time frame, there is some negative divergence unfolding, and it looks like that, even though the momentum is still very very strong, it's very hard to say until when it's going to last. Okay, and I, as a momentum trader, um, I am not a big fan of entering stocks where the momentum has already been exhausted, already uh, been stretched out so much. Exhaustion is not the right term here. The momentum has already been stretched out so much because it basically reduces the upside. Because understand that no stock is ever going to keep moving up without a correction, without a break, no matter how good it seems. Okay, like even if you see here, here also even L&D gave like a 28% correction in a matter of around 5 months. Okay, so it's always good to even buy a high momentum stock when it dips rather than when it's at the peak of its momentum. So what I would suggest is that in L&T, please don't purchase or don't make a fresh position right now. But sure, if you have an active position, then maintain a stop loss near the level of 2630. Okay, with 2630 as the stop loss, continue to hold. But if you want to make a fresh position, then don't do that. Another stock query is in HDFC Bank. Okay, so what I can see is an HDFC Bank. See, it's a perpetual bull stock. Okay, so the momentum is not only, the underlying trend is not only positive, but it's a very strong positive, because we can see the slope of the trend line is kind of a little steep. Now, taking a closer look, the stock has experienced a recent dip, and I can see that the stock has breached the 200 EMA on the daily time frame and is approaching the 500 EMA on the daily time frame. Right, the RSI has almost come and touched down on the level of 30, but I don't see any sign of negative range shift. That is, the underlying trend has definitely not been breached and the stock is still very very positive. Okay, now what we can see is that historically, whenever the stock comes down for a correction, it does have a tendency of going way below this thick gray line which you are seeing. This is the same, this is basically the 500 EMA of the daily time frame, even though you are seeing it on the 75-minute time frame. So see, I personally don't think bank is the best sector for you to invest your money in, especially if you want to go by momentum. I am seeing better opportunities in sectors like chemicals right now, and I've been saying this for quite a few weeks. In fact, some chemical stocks like Deepak Fertilizer has given really good move today, and I expect that trend is going to continue. So for banks, there might be a small uptick, but not a massive gain, because in HDFC Bank also, I am waiting for the stock to kind of retest the level of 1300 to 1400 range. That is this green zone. Okay, so basically, until and unless the stock comes back down to properly either retest the 500 EMA and this trend line and this zone, you can see there's like a cluster of supports here. Okay, so I am very positive that HDFC can come down to at least 1530 levels before it gives a strong uptrend. So my suggestion would be that for now, avoid HDFC Bank. There are better trade setups available in the market. Now let's look at IRFC for Mr. Krishna Kumar. Okay, I'm not sure what I typed. Okay, this seems to have worked. Okay, so IRFC has very strong volume build-up whenever it moves up. Okay, and the trend is very very strong positive. However, I can see that the stock has quite recently given a massive bounce and not taken a significant correction. Now if you see one thing, after this high volume pump that comes in IRFC, the stock has a tendency to give a pretty significant correction. Okay, like it was 30%, it was 15%, but here we don't see that kind of a correction happen yet. right? Um, so what should I say? Well, it still does look kind of strong. So what you can do is that, see, if you want to make a long position, I think you can make a long position for 10-15% upside, but you should maintain a stop loss somewhere around the level of 46. Personally, I would not participate in such a trade setup because the risk reward ratio is not sufficient for me to risk my capital. You have to have a base minimum risk reward ratio with which you want to play. For me, that ratio is 3. So the minimum risk reward ratio is 3, but for most setups that I participate in, the average risk reward is somewhere around 8 for me. 3 is the absolute minimum below which I will not compromise and not commit my capital. IRFC at this point of time does not meet that criteria, so it's a no-go for me. Ashish is asking for fresh buying in ONGC. So again, looking at the broad trend, I'm just going to remove that. Okay, so there are a lot more trend lines as you can see in ONGC. And I'm not liking these trend lines. I think they are a little old, so I'm going to remove all the drawings and I'm going to redraw them. And what I want to do is I want to connect these two bottoms. Now we can see there's no two proper tops which can be connected without cutting through the price, but there is a more prominent bottom here. So that is what we are going to work with. So those are the two bottoms. Now we're going to keep cloning the lines to kind of meet key peaks and key bottoms as we go higher and higher up. Okay, so say we connect these here, we connect these here. Okay, now let's go down to the daily time frame, and here I can see this is a properly formed bottom, so we'll draw that there, and we'll also draw one here, so that gives us a rough idea of the zones. Okay, so on the 75-minute time frame, if I see on the 75-minute time frame, this seems like a really good place to drop a line, because I can see on the 75-minute time frame that a positive divergence occurred here before the price started to move up. So this was basically the beginning of a good trend, which on 75-minute time frame I would have liked to capture. This 20% upside in 46 days is a good trend to capture. So this, I would like to place this here. Okay, so you see, even if I'm placing these trend lines on the 75-minute time frame, it is still the same trend line which carries the primary trend direction. All right, so what I am seeing here is that the 75-minute and the 15-minute time frame is not giving a very clear instruction about what we should do. In fact, it looks like a very good time to purchase ONGC was back here, because there was a lot happening in terms of volume indications, in terms of RSI, in terms of moving averages. But here it seems like everything is kind of dying out now. In fact, I'm also noticing a big negative divergence on the price. So like the price has formed the same high kind of, but the momentum has died out, which is the reason why negative divergences are formed. So this does not look very attractive to me. Again, I will emphasize that there are better trade setups in the market right now, and if you need help with that, feel free to join my Telegram channel. The link has already been posted for you in the comments. Okay, ONGC, HDFC, BHEL done, this done. Okay, we have a query on a weird stock that I don't really know, and we have already exceeded the time on this session. Okay, so with that, we've come to an end of the session. Thank you so much for giving me your time. I hope I was able to add some value to you and teach you something that you didn't know. If you'd like to connect with me, please join my Telegram channel, and I'm also linking my YouTube channel if you want to catch my previous Retail Trader Special Series videos. You can go on my YouTube channel and watch all of them. I will come and see you again on Thursday in the Let's Get Technical series, where I bring to you practical case studies from my own past analysis in trading. And we basically dissect those few trade setups from the past and see what went wrong, what went good. This helps us in identifying how to improve our trading as we go forward. It's an activity I've been doing for many years, and it has helped me become a much better trader. So I thought, why not share it with the rest of the world as well? On Friday, I also upload a market outlook series video on my YouTube channel, which covers my analysis of Nifty, Bank Nifty, and sectors. I talk about which are the sectors which are coming in momentum, which are the sectors which are going out of momentum. And if you are interested, you may watch those on my YouTube channel. So, with this, I will take your leave. Thank you so much for joining me today. Namaste.